And so basically, we can go ahead and start breaking this down now. But what a crack back lower high drop is, it's basically where a stock breaks through a key level of resistance, cracks back down below it with force, pushes back up and retests it with a lower high. And then we see our second leg to the downside, right? Because this is your first leg. We're seeing the retest. We would expect a second leg to the downside. And we call this the crack back lower high drop. It's a phenomenal short strategy when it takes place off a key significant level of resistance, which ORCL is. So we recognize the setup. We already know it's a high probability setup. Now we identify our confluences. What's the first thing I like to do? Use fib retracements and fib extensions. So I'm taking a fib extension from the swing high to the swing low. And what do I have? I actually have my golden pocket based on this fib extension right at the top end of that daily zone of resistance. So I now have two reasons to look to take this short. Reason number one, retesting that daily zone of resistance as intraday resistance. Number two, nice little golden pocket entry at the same exact point as the top end of that zone of resistance. So I just built two reasons to take this trade. I recognize the setup. I understand the probabilities. I know what criteria needs to be met, and it's meeting the criteria. It's already a high probability setup. Now I just want to identify my confluences. Run a fib extension, number one. What else could I do? Maybe try and see if there's a downtrend here as well. Not really. Downtrends are very subjective. I mean, technically speaking, you could throw a trend line here if you wanted to, and you see that you are validating that trend line, but I personally don't like it. So what else could we have? Where's the VWAP? Right? Maybe we got a VWAP. Maybe one of our EMAs are sitting right there as well. So let's just go ahead and add a VWAP. Very popular indicator that a lot of traders use, and maybe the VWAP gives us a little bit of confluence as well. And yeah, you do got your VWAP sitting right there up against the 50% extension. The VWAP is right inside of that daily zone of resistance. And we can honestly put that trend line back if you wanted to and say, hey, it already hit the trend line as well. So you're starting to paint a picture of what could this thing do. You're starting to get an idea of expectations. What are my expectations here along this crackback lower high drop, right? What would I expect to happen, right? And if we see it happen, right, how would I look to get positioned? Where would my entry be? Where would I put a stop? Where could I take profit and lock in profit, right? You're starting to get an idea of, do I even want to take this trade in the first place? First things first, recognize the setup. Make sure criteria is met. Identify your confluences. Build your trade plan. Wait for price action to validate the trade, and if it does, simply react to the opportunity. So let's just go ahead and build a plan. I'm not going to take the trade, just so you guys are fully aware. I'm not going to take the trade, but it's a great example. If it's a good trade, great. If it's a bad trade, at least you can see the trades that don't work out. The other thing, too, is we have a 5-minute fair value gap right here. You see that? We just came back inside of that 5-minute fair value gap. Now you got 3 solid reasons to take this trade. This is actually looking pretty good now that I say it. I may take it. I may take it because that fair value gap is in line with the fibs golden pocket off that daily zone of key resistance. And it's a nice crackback lower high drop. It's looking pretty good. I'm not going to lie. The last thing, too, is I'd want to see it break this little intraday uptrend. That would be some added confirmation that if we crack below this trend line as well, we could absolutely see that downside. So entries right off that 5-minute fair value gap inside of that golden pocket, right off that daily zone of resistance. You want to put stops over that daily zone of resistance. First target would have to be low a day here. Look at that. You got a 3.4 to 1 risk reward. You risk $100, you make $340, right? And you have 4 reasons to take this trade, and you recognized the setup. What's the setup? A crackback lower high drop. So just like that, you come in, get prepared in the morning. You see we have a key daily zone. Now you're just kind of analyzing, waiting for an opportunity to present itself. An opportunity is presenting itself. What is it? What's the setup? What are you recognizing? Crackback lower high drop. Great. What are your confluences? Use your fib extensions, trend lines, 5-minute fair value gaps. Pull out the tools from the tool belt. Identify at least 2 to 3 reasons to take a trade. Do you have at least 2 to 3 reasons to take the trade? Yes. Okay, where's the ideal entry point? Where would your risk go? Where's your target at? Okay, how many contracts do you want to take? How many shares do you want to take? Get positioned correctly, accept the outcome. Let price action validate the trade. And if it does, take the trade. Let's go ahead and start shopping some options here and see if it's even worth it. So ORCL, I guarantee the options suck. Not gonna lie, I guarantee the options are duty.
Spreads are brutal.
Shares. What's that?
Spreads are brutal. Spreads are brutal.
Yeah, probably just take shares on this then. Even if we go a 1 day out and we go with some 139s, yeah, you got 10 cents of spread. Yeah, the spreads suck. But I love the setup, guys. Love the setup. I'm late to it. I spent all the time breaking it down, explaining it, doing my analysis. Obviously, the best entry was right in that fair value gap as it tapped it. Right? Beautiful setup, beautiful opportunity. Again, I feel like I'm a little too late, but let's utilize this as an example to learn from. See how it plays out. How would we manage the trade, right? If it stops you out, you know, what did we see leading up to the stop out to where maybe you could have pulled stops down to mitigate your risk? Let's just use this as a great example of that one strategy. And then the process of identifying your confluences and making sure criteria is met, and then how you would build a plan on this type of setup.